Well, joining us to get across the market open now, Conrad Song joining us from Macro. Conrad, welcome back to AusBiz. We've just heard from the Fed. The key word there being uncertainty, particularly in relation to the effect of those tariffs.
Yeah, sure is. I mean, that being said, we do have a little bit more clarity on two cuts by October 2025 was originally September, three cuts by January 2026 was originally March. The market seemed to have responded relatively positively to it with the Dow up, S&P up, Nasdaq up, and even the SPY futures up about 53 points last time I checked. So we're hopefully going to see that translate to the yes, or our market, the XJO. But yeah, generally speaking, I guess it is a little bit clearer than what we had prior to the meeting. So yeah, again, markets have received it positively.
Conrad, how are you viewing overall equity markets at the moment? And of course, the question for investors is to whether we have seen a bottom.
Yep. So, obviously the decline's been quite hefty, I mean, across the last couple of months. In that period, not to sort of toot our own horn, but we have been able to manage to see some pretty strong performance in, the safe haven positions that we've got a decent allocation in, such as, gold being a major thematic. November 15 last year, we picked up an ETF called PM Gold, and that's, outperformed the index quite aggressively. That being said, in terms of identifying whether a bottom is here or not, we're looking at some soft indicators which are still pointing to the sort of bearish directional bias. So consumer sentiment being a major one. Technically speaking as well, we're sort of yet to see much of a consolidation, or a support level building. So very much catching a falling knife from our point of view to sort of enter the markets now.
You have alluded to how your positioning is, well, certainly you mentioned in November in terms of that exposure to gold. What other tools are you using at the moment just to limit those downside risks?
Yep. So I think when it comes to sort of supporting investors, it's not just the periods when markets are rallying. It's definitely the periods in which you see this pullback or this volatility on the downside that we see opportunity. But in order to sort of take advantage of the situation, you've got to protect the portfolio. And so we've managed to utilize, again, another ETF. Well, there's two particularly that have this sort of function, which is a negative correlation to the market. So we picked up BBOS and Bear. Um, these are two distinct ETFs that have been sort of very helpful for us when trying to and attempting to time the market, which is always easier said than done. BBOS is sort of the more aggressive one um, with a sort of 2.2 to 2.7 times leverage, again, negatively correlated to the market. The other thing that we've been utilizing are LICs. The model portfolio that we have here at Macro has taken advantage of sort of LICs that have broad exposure to things include not only the Aussie market but also in the US, and just naturally the diversified nature of these securities. We've experienced probably a lesser blow. I think what are we down? 9% of the last 8% of the last 2 months on the XJO. So those positions have sort of been only we only experienced sort of a 50 to 60% move in those LICs or ETFs relative to the market. So protecting the downside through some shorting or some negatively correlated securities, including taking advantage of some LICs or diversified ETFs. We've been able to protect the portfolios, I guess as effectively as we think we can, outside of selling everything before the move, which was probably just not going to happen.
All right. Now, of course, given where the market's come back to, does present some buying opportunities given the discounts we've seen in some of those stocks. Where have you been looking?
Yeah. So yeah, we do have a bit of a shopping list that when the market from our point of view, bottoms out, we'd love to sort of take advantage of naturally some of those bigger names, those big blue chip names that have um, a more resilient sort of, I guess, just business during this sort of risk on period would be of interest to us. Things like Ramsay Health Care, healthcare is a very defensive sector, and they've just been absolutely pummeled. So um, there's a few other names out there. Australian United Investment Company. It's a very strong dividend sort of play for us that we're keeping an eye out on. SRG Global is another one. Just an infrastructure company, engineering and infrastructure company that, again, it's just a sort of strong balance sheet business. These are companies that I think, and there's many more in this kind of similar character that have just been significantly discounted, and so naturally would be something to look at. That being said, gold and any sort of businesses related to gold have been sort of a pick for our analyst team, despite the markets rallying and gold sort of having less of a safe haven sort of feature relative to the market. We still believe is a thematic to sort of look out for and keep in the portfolios too.
Is that picking gold stocks, or you're sticking with more of an index, or buying the physical asset itself?
I think it would be both. I mean, the thematic itself, if you like gold, again, for the safe haven, that's going to have the translate, all those effects are going to translate to sort of gold stocks. That being said, whether you're in a discovery mining company or something a little bit more established, you'll probably experience different return profiles. But PM Gold, you really can't go wrong. It's been something that we've had in the portfolios for quite some time for longer term investors, and more recently, sort of middle of November, picked up for sort of the more active investor. And yeah, it's just naturally proven to be quite good in this period.